Hello and welcome everyone. In today's video, we are going to cover a complete gold market update. First, we will break down the technical analysis on the 4-hour chart, and then we will deep dive into the fundamental drivers, including monetary policy, macroeconomic risks, and what to expect in the week ahead. So make sure you watch till the end. Let's start with the chart. Technical analysis, 4-hour. If you look at the 4-hour chart, gold has been trading inside a parallel ascending channel for a very long period. Both the upper resistance trend line and the lower support trend line are being respected extremely well. Price has been moving smoothly between these two trend lines, and so far the market has failed to break decisively either above the channel or below it. This tells us that structure is still intact and trend continuation remains valid unless proven otherwise. Now, let's talk about the most important level on this chart. The 43.53 zone is a very strong resistance area. Previously, when price reached this zone, we saw strong rejection followed by a massive sell-off, confirming that this area is a major supply zone where sellers are active. Currently, price is once again pushing toward this resistance. If gold breaks and closes above 43.53 with a strong candle close, then we open the door for new all-time highs with upside targets toward 4,400 first and potentially 4,500 if momentum continues. However, until we get that confirmed breakout and close, this area remains resistance, and chasing buys here is risky. On the downside, the most important support level is 41.60. If price breaks and closes below 41.60, then the structure weakens significantly, and the next downside target becomes the 4,000 psychological level. What's important to notice is how clean and smooth the price reaction has been from the lower trendline support. Each time price taps the ascending support, buyers step in aggressively, creating higher lows. This confirms that the overall trend is still bullish. From a trading perspective, the best plan is patience. Ideally, we want price to retrace toward the lower part of the channel, print a new higher low, and then we look for long opportunities targeting all-time highs. Yes, you can buy from the current market price, but it is not optimal. Buying directly into resistance offers poor risk to reward. It is better to wait for either a clear retracement and higher low confirmation or a confirmed breakout and close above resistance. Until then, it's better to stay disciplined and let the market show its hand. Fundamental analysis, macro and monetary policy. Now let's shift to the fundamental side. Monetary policy, primary driver. The Federal Reserve recently cut interest rates by 25 basis points. This decision was made despite inflation remaining somewhat elevated, as economic growth has moderated, job gains have slowed, and unemployment has started to rise. This increases downside risks to employment, which forced the Fed to act preemptively to support the labor market. As a result, monetary policy is now firmly data-dependent. Future decisions will be guided by incoming labor data, inflation data, and financial conditions. From a gold perspective, lower interest rates are supportive because they reduce the opportunity cost of holding non-yielding assets like gold. Global risk outlook. On the global front, the Fed's rate cut and cautious forward guidance stand in contrast to tightening expectations in economies like Japan. This divergence has pressured the US dollar and increased uncertainty across global markets. At the same time, U.S. labor indicators are cooling, manufacturing PMIs remain weak across major economies, and growth momentum is slowing globally. These conditions have increased risk aversion, pushing investors towards safe haven assets such as gold, the Japanese yen, and the Swiss franc. Additionally, ongoing geopolitical tensions and negative shocks in global equity markets, especially in technology stocks, continue to weigh on sentiment. As a result, defensive demand for gold remains elevated. COT report update. Normally, we would also analyze positioning via the COT, Commitment of Traders report, but publication has been suspended due to the U.S. government shutdown. It will be available real-time data next year. This removes a key sentiment tool, making price action and structure even more important in the short term. The week ahead, key USD events. Looking ahead, several high-impact U.S. data releases will influence gold through USD strength or weakness. Retail sales, core retail sales, unemployment rate, average hourly earnings, Philly Fed Manufacturing Index, weekly unemployment claims, existing home sales. These data points will provide insight into consumer spending, labor market health, and inflation pressures, all critical drivers for gold. Any downside surprise in these numbers could further weaken the dollar and support gold higher. Final summary and trade plan. To summarize, gold remains in a strong ascending parallel channel. 43.53 is major resistance. Break and close above 4,400 to 4,500. 41.60 is key support. Break and close below 4,000. Trend remains bullish, but patience is required. Best longs come after a retracement and higher low, not at resistance. Fundamentals remain supportive due to rate cuts, slowing growth, and rising risk aversion. If you want to learn technical and fundamental analysis properly and trade the markets with a structured, professional approach, you can message me directly on Twitter for one-on-one mentorship and training. If you found value in this update, make sure to like the video, subscribe to the channel, and comment below. Do you think gold will break resistance or reject again? Thank you for watching, trade safe, and I'll see you in the next market update.